Let's now close out this chapter with a discussion of special topics in regards to accounting for business type activities of state and local governments. And we're going to talk specifically about the enterprise funds and a couple of things that apply to them. Enterprise funds can acquire assets under lease agreements. And just like we saw when we looked at the internal service funds, we do need to record those assets as an intangible right to use asset. And we will also record a liability. We're basically applying the same types of things you guys have seen in your intermediate course in regards to calculating out net present value. We would have interest and amortize that out over the life. However, there is a limit here. It needs to be the shorter of the lease life or the useful life. So whichever one of those is the shortest, that's the one that we're going to use. As we pay off that lease liability, again, we're going to amortize it out, and we are going to show interest expense. At the same time, we're going to be reducing that lease liability down over the shorter of. In regards to the CPA exam and leases, I've mentioned this at least once before. There are quite a few changes going on currently in regards to FASB and the treatment of leases for for-profit entities. You need to be aware of that when it comes time for you to sit for the financial accounting and reporting and most likely the audit sections of the exam, because you're going to need to look at it for FASB purposes, but you also need to keep it in mind for GASB purposes, because it's very likely that GASB is going to be making some changes as well. So when you start studying and turning in your notice to schedule papers and all that other fun stuff, just remember I said you need to go and figure out where the AICPA stands on when the lease changes will be incorporated into certain sittings for the test. So by the periods that they offer the test, when will students be required to know it based on when the changes were made? All right, next item, regulatory accounting principles. As we have mentioned, that accounting and reporting procedures for our enterprise funds, we're basically able to follow, for the most part, what the for-profit entities in the same industry are doing. But keep in mind that there are lots of regulatory authorities out there that may have basically mandatory or prescribed things that must be done by these enterprise funds in order to comply with regulations and laws, including not only how the financial statements may look and the account names they may be using, but also that there are very likely reports. In addition to all this financial stuff that has to be taken care of, there are reports that have to be filled out and timely filed with these regulatory agencies by these governmental enterprise funds. In the back of a chapter here, it's got, additional terminology and things that are going on there. I'm not going to require you to know that for a test, but I do want you to know it's in the book just in case you end up working at one of these kinds of organizations and having to help comply with this. So hang on to this textbook. Next item is accounting for municipal solid waste landfills. That's a mouthful, hence why they abbreviate it as MSWLFs. As you can imagine, we basically generate a lot of garbage here in the United States, and we have all of these landfills all around the country where we fill it up with garbage, and we have oversight. The EPA and other parties are involved in oversight of protecting our environment. And of course, there are laws in regards to where these can be located, the design of it, how they're supposed to operate, continuous monitoring of the groundwater in the areas of these landfills. They're looking for seepage, not only of contaminants, but just seepage, period. We really would prefer this stuff that is, rotting, so to speak, not to get in our groundwater. They also have to provide corrective action, closure of the landfill once it's full, and post-closure maintenance and monitoring for 30 years after closure. They also have to provide for assurance, things like insurance or surety bond. There's some other items mentioned within the text. So as you can imagine, the government has got to spend some time figuring out what are the costs over the lifetime plus 30 years of handling these landfills. And the units of production method is utilized for expensing out during the useful life of the actual landfill the cost that will be incurred during the use of the landfill, and then for the 30 years after that it has to be maintained, etc. So a lot of money is going to be spent. If you think about it, the cost of handling these landfills and meeting the requirements of the Environmental Protection Agency, and providing for future financial assurance and upkeep and complying with all the accounting and reporting that goes on with this can be significant for many governments. With this units of production method, if we have $9.5 million expected to close and care for the landfill after we've utilized it, we are going to expense that out during the time that we're actually using the landfill. All right, so they're going to be making a provision for, and you can basically take the amount estimated and then divide it by the amount of cubic yards that are expected to fill the landfill. In regards to disclosures, again, think of what all the government has got to make sure they include within their financial statements. Who are the users? We want to know everything about what the government is spending our money on, what kind of potential liabilities or contingencies there are. Long term, again, the citizens are the ones paying the taxes in, and in some essences, fees and charges in, and what is the money being spent on. So in regards to the disclosures for these landfills, the nature and source of the landfill closure and post-closure care requirements. So what are the laws and regulations that have to be met? Those are disclosed. The recognition of a liability for the closure and the post-closure care based on the landfill capacity used to date. So what's the liability sitting out there? The reported liability for a closure and post-closure care at the balance sheet date, if it's not apparent from the financial statements, and what the estimated total current cost of closure and post-closure care remaining to be recognized. So what's still out there? The percentage of landfill capacity used to date. So maybe we thought the landfill was going to last us longer than it is, but we're filling it up faster than we thought. That could be some useful information for administration and others. So what's our used to date, but then what's our approximate remaining landfill life in years? We got to plan ahead. We're going to have to make another one. How closure and post-closure care financial assurance requirements, if any, are being met. Also, if we've got any assets restricted for the payment of the closure and post-closure care cost. If it's not already apparent from the financial statements, what have we set aside to pay for all this stuff later? And lastly, the nature of the estimates and the potential for changes due to inflation or deflation, technology, or even applicable laws or regulations. Again, things change all the time, and maybe we're going to have more stricter things put into place, or maybe the 30 years is going to be increased to 45 or 50. What effect would that have on our numbers and things that we've got to account for?